Hi student, good day. Today we're starting with the chapter 9, Accruals and Prepayments of your study text, Financial Accounting, FA. So what is accrual and what is the prepayments? By meaning itself, you will understand, but we will clarify all these areas, understand how the matching concept applies to accrual and prepayments, and identify, calculate the adjustment relating to accruals and prepayments, and record appropriate adjustment for accruals and prepayments in general ledger, and understand the impact of accruals. So we will discuss all this area. This chapter will be precise one. It will clear your concept. Accrual concept will be expenditure and income. So it will be accrued for and the prepaid and accrued and prepaid. It is allocation will be done for the accounting period. Suppose if you paid rent for in advance for 12 months, but if it is in accounting period, it is relating to 4 months only, then you will expense it out 4 months and the remaining will go in the 6 month or 8 months will be as a advance payment. This is under prepaid rent. So under accrual, if you just pay, if you use the facility and you paying in the future date, so it's mean if even if you didn't pay, then you will account for under the accrual concept. Accrual basis accounting means that all calculation profit and period we must include all income and expenditure relating to the period, whether or not cash has been taken uh, into consideration. So profit just to show accurate profit and accurate expenditure for the specific period. So to find out the exact profit for the 31st December 2025. So this is example, simple for your understanding. So just we want to make sure to calculate accurate profit. Even if we pay 5 year advance rent, but we will charge in the books of account only for 12 months period which we have used. So other unused item period we will consider as a advance payment. Accrual concept, and according to conceptual framework, explain accrual accounting as a depositing effect of the transaction and the events of circumstances on reporting entity, and claim the accounting period which those effect occur. This will be case even if cash receipt and payment are different reporting periods. As we explained earlier, if it is you paid 2 years advance rent, but you will mention in the 1 year only for the accounting purpose. If you have received advance payment, so even for the sale, but sale you will recognize when your goods shipped. So this is go through this when purchases also will help you to understand the scenario, cost of sales, expenses. This is a conceptual framework definitions. Accrued expenditures, how it is expense for. Accrual arises when expenses of the business relating to the year have not been paid by the year end. This will reduce profit for the year. In this case, necessity record the extra expenses relevant to the year end, create a corresponding statement of financial position liability called an accrual. Like expenditure account, debit and accrual is the credit. So just to make sure your correct period, accounting period you have accounted for. This illustration will clear your understanding. Entity fuel and energy charges 12,000 per annum in the year to December 31st, 2005. 9,000 was paid. The fuel energy usage for the final quarter is paid in January 2006. How it is treated for? So see, this is the way how this is illustration is calculated. Total expenses charged for the statement of finance profit and loss energy should be 12,000, which is they have mentioned. Uh, and then year-end account accrual is a 3,000 expenses that has not yet been paid. The additional transaction entry will be taken place. Fuel and energy 3,000. Accrual is a 3,000 which they need to pay in the later date. Know the accrual method one. So bank is they already paid 9,000 accrual carry forward, and profit and loss account they will make a balance sheet prepare 12,000 for to just to show a proper expenditure which has been incurred for the period. So if method two also will in both cases, so they have a same way of interpretation. Prepaid expenditure. Now it is the opposite way. If you paid in advance, prepayment arises when some of the following year expenses have been paid in current year. Like next year also you paid in this year. So prepayment will be debit and expenses account will be credit. How the illustration will clear your understanding? So the insurance charge for the entity was 24,000 per annum. However, 30,000 was paid in 1st January in respect of the future expenses. On 31st December, what is the closing prepayment insurance expenses for the year? So they have paid 24,000 was a yearly, and however they paid 30,000. So this is a 6,000 was a prepaid. So means 6,000 prepaid is a 6,000 debit, and the credit is an insurance expense account, which is just to make sure 24,000 for the year it should be expense should be charged. This is accrued income now. Accrued income arises when income has been earned in accounting period but has not been received. This is also fair enough. The debit in accrued income in statement of financial position, credit is a profit and loss account. Just to make sure your income is already you have booked in your books of accounts. This is the way business earn a bank interest 3,000 per month. 3,000 interest income has been received year end 31st December. What is the year end bank interest income for the year relevant? What is the relevant transaction? This is the way how they have explained. This is again prepaid income arises when income has been received in accounting period but is related to the next accounting period. Income P&L prepaid income we will be credited. This example, rent our property 4,000 per month. For 64,000 has been received during the year end. And what is the year end liability and what is the real income for the year? This is a way how they want to show. Total income credited to the statement of financial position 48,000. Year end prepaid liability is a 16,000. 64 minus 48 that has been received, which relate to the following year. Rent income 16,000 and prepaid income 16,000 is a credited. This is all for chapter 8, chapter 9, and the accrual concept, the income expenditure, how accrued and prepaid expenses are booked, how this is the entry at the documentary entry takes place. So student, this is all for your chapter, and see you in the next chapter. If you have any question, just comment it or WhatsApp me for further detail. If you want revision classes, one-to-one revision classes, do contact me, and we will coordinate with you for further explanation. Thank you.